Welcome to the deep dive.
Great to be here.
So, today we're digging into something huge based on all the material you sent over, cryptocurrency and its actual impact on global markets.
Yeah, it's a big one. We've got questions ranging from, banking challenges right through to NFTs and energy use.
Exactly. And the mission, as always, is to sort of pull out the key insights, understand what's really going on with crypto's influence.
Right. So where should we kick things off? Maybe the challenge to traditional banking.
Yeah, let's start there. How are cryptos actually shaking things up for the old guard?
Well, the core idea is decentralization, isn't it? Moving away from needing those central banks or financial institutions for every transaction.
Okay, decentralization.
Which, potentially cuts down on fees and maybe gives people more control. It directly challenges the way banks have operated for, well, centuries.
So thinking about that, what does that mean for, say, emerging economies? Is it all upside?
That's where it gets complicated. It's definitely a double-edged sword.
How so?
On one hand, yes, it could potentially open up financial services to people who've been excluded, the unbanked. Big potential there.
Okay.
But the flip side is the volatility. We see these huge price swings.
Yeah.
Imagine an economy becoming reliant on an asset that, jumps up and down like that. It's a massive risk.
Yeah, that volatility is always the elephant in the room, isn't it? Which brings us to Bitcoin, the original. How has it changed how we even think about money or value?
Bitcoin really introduced this concept of digital scarcity, a limited supply built into the code.
Right, like gold.
Exactly. That comparison gets made a lot. It forced this global discussion.
Yeah.
Can something purely digital, something you can't physically hold, actually be a store of value? Even if using it to buy coffee is still, let's say, debatable.
Okay. So with all this disruption happening, are the big players fighting back or joining in? What about central banks? Are they seriously looking at their own digital currencies, CBDCs?
Oh, absolutely. Many are. The major topic for central banks globally.
Why, though? What's the motivation?
Well, it varies. Some see it as a way to make payment systems more efficient. Others might be thinking about maintaining monetary control if private cryptos become too dominant.
So keeping some control in a digital world.
Precisely. But how they design them, what features they have, the privacy implications, that's all still being worked out. Very different approaches, country by country.
Interesting. Okay, what about another classic financial headache? Sending money across borders. Is crypto actually making that easier?
It could. That's the potential, anyway.
Right.
By cutting out some of the intermediaries, the correspondent banks and so on, crypto transfers can be faster and cheaper.
But there's always a but, isn't there?
Well, yeah. The big hurdle is regulation, or rather the lack of consistent regulation across different countries. That makes widespread, easy adoption really tricky right now.
Gotcha. Okay, let's tackle the big debate then. Inflation hedge or speculative bubble? Where do you things stand on that?
Yeah. The million-dollar question, maybe literally.
Yeah.
The hedge argument usually points back to that scarcity idea we talked about, like Bitcoin's limited supply. Maybe it holds value when traditional money loses purchasing power.
Makes sense in theory.
The bubble side, though, points to the extreme volatility and the fact that a lot of the price seems driven by, well, hype and speculation, rather than any fundamental value or widespread use case.
So no clear answer.
Probably not a simple one. It likely depends heavily on the specific cryptocurrency and, honestly, who you ask. The reality might be a mix of both.
Right. And all this uncertainty must be giving governments headaches. How are they trying to regulate this space? Are we seeing any kind of common approach?
Not really, no. It's a real patchwork quilt out there. You've got some countries embracing it, trying to create regulatory sandboxes. Others are imposing strict rules or even outright bans. It's very fragmented.
Which must create challenges for businesses operating globally.
Definitely. And opportunities, too, for those who can navigate it.
Okay, broadening out a bit. We hear about NFTs, blockchain tech itself. How do they fit into this financial picture? Are they just sideshows?
I wouldn't say sideshows. NFTs, for example, they highlight how blockchain can track ownership of unique things, not just currency. That has implications for art, collectibles, maybe even real estate down the line.
Tokenizing assets.
Exactly. And the underlying blockchain tech offers potential for more transparent and secure financial record keeping in general, beyond just crypto coins.
Okay. But there's also the environmental cost, right? Crypto mining and energy consumption. How big of a deal is that?
It's a significant deal, especially for certain cryptocurrencies like Bitcoin that use proof of work.
Proof of work.
Yeah, it's the consensus mechanism.
Okay.
It requires a lot of computing power and therefore a lot of energy. This has sparked major debates about sustainability.
Is the industry responding?
There's definitely a push towards more energy-efficient methods like proof of stake, but the energy footprint is still a major concern.
Okay, final point then, and it's a fundamental one. Could all this, could crypto actually undermine traditional monetary policy? Can central banks lose control?
That's the underlying fear for many policymakers, I think.
Right.
If a large chunk of the economy starts operating on decentralized crypto rails outside the traditional banking system, then yes, tools like setting interest rates might become less effective. It's something central banks are studying very, very closely.
Wow. Okay, so we've really covered a lot. The banking challenge, risks, value perception, CBDCs, payments, the hedge bubble debate, regulation, NFTs, energy, and even monetary policy itself.
It really touches almost every aspect of the financial system, doesn't it? A space that's moving incredibly fast.
Absolutely. So for everyone listening, here's a final thought to chew on. Considering everything we've touched on, the tech, the economics, the rules, the risks, what single factor do you think will be the most decisive in shaping how cryptocurrencies actually fit into the global economy going forward? Something to think about.